Thank you so much. A very good afternoon on my end. So very good day to everyone who is part of the conversations today. My name is Alakanani Itireleng, based here in Gaborone, Botswana. Thank you. It's an honor, I think, to host all of you today as we discuss regulation and tax compliance. I'm very glad because I know on our panel we've got a lot of people who are like well versed on this discussion, and I do believe our discussion will be flawless and we'll be able to like come up with very strong points and very strong reasons why and reasons why not regulate tax and all that. Yes, before we start, I will kick off first by making an intro. You let us know who you are, what you are doing, and all that, in relation to the topic that we're handling today. Yes, we can kickstart. Thank you so much. Maybe start with you, Maureen, because you're the one that I know.
Sure. Hello, everyone. My name is Maureen Murat. I'm an attorney based in DC, and I have a business called Crowdy Advisors. And so my focus really started in crowdfunding, right, and finding ways to fund businesses. And I think crowdfunding and cryptos and the Web3 kind of just mesh together in order to support small businesses who haven't necessarily had the options that we have now with Web3 and cryptos.
Thank you so much, Maureen. Yeah, we can all, I'm not gonna call names. I won't call Maureen because I know her. So you can all, anybody who is ready to like make an intro, please go ahead.
How you guys doing? My name is Charles J. Kelly, also known as CJ the Smart Guy. I'm a certified public accountant. Sorry, I've just been running about. I had another call this morning. But I focus mostly on cryptocurrency taxes, bookkeeping, as well as consulting. I think that with the evolution of cryptocurrency, the accounting field is about to change a lot, especially like CBDCs. And so my goal is to make sure I fuse the accounting and the cryptocurrency industries.
All right. Thank you, CJ, the Smart Guy. Thank you so much.
Hard to follow someone who has the smart guy in his title. My name is Joanne Holmes of Holmes at Law. I am a global intellectual property attorney. I manage IP in 140 countries, and I help clients in Web3 design engaging offers, provide a little peace of mind at launch, and help accelerate revenue when they're scaling. I personally love to help my clients understand how to make money from their creativity and innovation, and I'm looking forward to having a fun conversation with everyone.
Thank you, Joanne.
All right. Well, I'll go next. So my name's Troy Foster. I'm a partner at the law firm Perkins Coie, and it's a international law firm. It represents companies in the Fortune 50 as well as kind of startups. My work focuses on the emerging company space. So I'm the co-chair of our emerging companies and venture capital group, and in that context, run across a lot of crypto and Web3. It's a big part of what our firm focuses on, so. Let's see, for the last probably 6 years, this has been anywhere from 20 to 40% of my practice. So looking forward to the conversation.
Thank you so much, Troy. Okay. Has everyone done the intro? Okay, thank you so much, everyone. Thank you, Troy Foster. Thank you, CJ the Smart Guy, Joanne, and Maureen. Thank you for joining the conversations. Like we said in the beginning, today we are looking at regulations and tax compliance. I think the issue of tax has been like a thorn in the flesh even way before we're talking about Web3 and NFTs and metaverse and everything. So today we are looking at regulatory and tax compliance in Web3. We know Web3 is trying to decentralize things, having new ways of running businesses, maybe running businesses on smart contracts, etc., etc. So maybe the first thing that I will want us to look at is the state of the affairs now. How is the tax regulations and the tax compliance as far as cryptocurrency is concerned? How is the field, how is it like in the world, like generally, not only looking at the United States? How is the state of the affairs now? Maybe just looking at crypto, just crypto, before now moving on to Web3. How is it? How does it stand as of now?
Well, I can jump in from a just from the narrow U.S. securities law sort of, perspective. I think what we're seeing now is sort of a continuation of the story that started with the new administration. So it was, there was a lot of optimism around Gary Gensler and the new, kind of SEC head, and the thought was that, having somebody there that really understood crypto would create a little bit more of a relaxed enforcement environment and kind of give us give the industry, frankly, a little room to grow without kind of smothering regulations. And unfortunately, that the optimism surrounding his appointment was unfounded. He's been extremely hawkish in his approach, and that trend has continued. There's a little bit of a jurisdictional spat between the SEC and the CFTC about whether these crypto would be regulated as a security or a commodity. I think the industry would much prefer commodity regulation, frankly, because it's a little bit more predictable. But the SEC has been extremely aggressive in this regard, and the most recent sort of cases. I mean, there's the Ripple case, right, which was a big surprise to folks in the industry that they would, go after an offering that was that old, just in sort of time. And then there was a more recent case where the SEC went after a couple of employees of Coinbase for insider trading of tokens that were on the that Coinbase lists, and that was a pretty aggressive stance for them to take in a case, but it's very consistent with what Gensler has been saying about his view that all of the majority of the tokens that he sees in the trading market are securities. So that's kind of, from my perspective, again, my narrow window from the US of what we're seeing in terms of the regulatory landscape.
Thank you so much, Troy.
I would just add to what Troy shared that Web3 is innately global. And so to the point of looking at this industry from a perspective that, of course, American law is designed to have a long arm reach outside of the United States. So to the extent that US citizens are involved, or have access to be able to own assets, US law is going to have impact, just like, for example, EU law is likewise designed to have long arm impact. What the challenges between, for example, the SEC and CFTC are having is the effect of that is that it's very difficult to advise clients at this time here in the States, because we know that the regulation is in evolution. We also know that litigation is happening. And so judges and juries are creating law in real time. So what that does with a mindset towards Web3 being broader than the United States is, for those who do have more friendly regulatory regimes, there are opportunities. And this technology and innovation is not going to pause while the United States at the federal and frankly at the state levels consider how cryptocurrency should be regulated. So to those outside the US, we would invite you to really think about the ways that you and your citizenry can be served through Web3 innovation, and think about ways that you can balance out protecting your citizenry together with the economic opportunity that blockchain technology would offer.
Well said, Joanne. Thank you so much.
And I'll let CJ talk about the tax, because I think that was your question initially, right? Like the tax compliance issues. But it, you know, I've been following the IRS for several years now, because I want to say in maybe 14 or 15, they put out an initial bulletin talking about cryptos are going to be considered as property, and if you use it as income, it would be taxed as income. But then they hadn't really created a structure to figure out, like, well, if we're going to do it based on, you know, capital gains or loss, then what was the fair market value, what did you lose, etc. But I think over the years they've found a way to kind of create some structure around it, even though some of their bulletins or notices garner more questions than answers, but there's that. But I do know that, I think, was it this year, CJ, or last year? Maybe it's this year's tax return. They've actually put a question on your 1040 now to say that you have to be able to tell them, you know, whether or not you've purchased, exchanged, et cetera, cryptocurrency in the last year. So I think in terms of on the tax side, it's really becoming more involved. And I want to say, in terms of spat of jurisdiction, to just touch on what Troy mentioned earlier, even the FTC now is engaging in conversations about cryptocurrency. So I think, to your point, Joanne, you know, the US, the federal government agencies are reaching wherever they can.
Yeah. Okay. Okay. Go ahead. Somebody wants to talk. Yeah.
Yeah, to follow up what she was saying, around 2013, they came out with the bulletin basically saying that cryptocurrency is treated as property. But before, like, I would say between 2013 to 2017, most people using like-kind exchange as a way to legally avoid taxes. But as of the Tax Cuts and Jobs Act after 2017, like-kind exchange stopped being used. And so that's why every single sell, exchange, or spend of cryptocurrency creates a capital event that has to be reported on the 8949. And so when it comes to the IRS and DeFi or trading, they don't really get along, because you have to report every single one of those transactions. And so most of the time, like for instance with equities, the exchanges will provide 1099-Bs, but in this crypto space, it's very difficult to determine what your cost basis is. And so you're having a whole lot of regulation and you know, thought leaders coming together to figure out, well, how can we tax this cryptocurrency accurately? And so unfortunately, a lot of people are going to be receiving 1099-Bs, and it's going to be saying that they owe a whole lot more tax than they actually do. And so people have to manually put their cost basis and keep track of all of that, as well as to follow up on what Maureen was saying, is that in 2019, they added that question in your tax return, but it was on Schedule 1. Most people don't file Schedule 1s, I'll say about 50%. And then in 2020, they added that same question on the first page. 2021, they changed a little bit. And now in 2022, they're changing it again. But if you don't check that box as yes, and you're in this crypto space, that's an easy way for them to catch you for fraud, because they're trying to come after people in this crypto space pretty heavily.
Wow. Wow. Joanne was talking about the regulation still like evolving, and some kind of there's still some kind of trying to understand, you know, how to maybe to regulate, or maybe how to make people to be tax compliance. Do we see that not as a challenge, especially maybe to people who are doing crypto, because one moment you don't know what really you are being taxed for, or how you should be submitting your taxes as what. So do we see that as kind of a confusion in the space, not only for the people, but also that not considering like some kind of confusion at the end of the day?
Oh, there's plenty of confusion. There's confusion from the IRS, there's confusion from the taxpayers, there's confusion all the way around. I know that they're trying to do more additional tax enforcement. They just added a bunch of money, and they had different leaders who are going to be looking over digital assets. But the biggest thing is, how much are we supposed to be paying? With NFTs, is it considered collectible? Is it considered property? So there's lots of gray areas. It's confusion all the way around. I just tell my clients to do their best and take fraud off the table.
One thing that I would add, especially because many of those who are listening in to the summit are going to be entrepreneurs, To the extent that you are a business owner, and just to make it as simple as possible, let's say, for example, you are a solo business, you're the only employee in your business. You might consider setting up a solo 401k, or you might have an IRA, and you can use either a Roth or a traditional IRA, or a Roth or a traditional solo 401k, and use that retirement vehicle as a way that you can buy digital assets, including cryptocurrencies. And then you're not dealing with the year in, year out questions around cost basis and reconciling it every transaction. It makes it possible, especially if you are thinking towards the value of digital assets over the longer term, to both be able to take advantage of opportunities in the market, whether the market is down and you want to be able to take advantage of sales or acquisitions in a way that you're not going to have to deal with an immediate tax implication of that. So I would highly encourage people to speak to your tax attorney or your CPA and think about ways that you can reduce some of the yearly tax challenges of reconciliation through doing your investments through retirement vehicles.
Yeah, just one that I agree with all of that. I think that's good advice. Just what we see on our side is businesses that are that use kind of their crypto as a additional means of employee compensation, right? So in addition to your salary, in addition to your annual bonus, you get a token allocation, right? Or something like that, right? And there's challenges with doing that, again, how do you tax that? And I think that generally our advice is quite similar to CJ's, right? Which is, just make sure that you're reporting it in some way, right? And so you can arm wrestle on an audit with how you've done it, but at least it's not, they can't get you for the failure to disclose it, right? And so I think that's good advice as well. I think from a macro perspective, generally speaking, we're of the view that kind of getting a tax regime in place that makes sense and is predictable is actually probably a positive for the industry, right? Kind of makes it more have it exist in the sunlight and have government jurisdictions start to enjoy that tax revenue, makes it less, makes crazy things like bans and stuff like that less likely.
I was going to add that one of the things that I think causes confusion for some of these regulatory agencies is that it's also moving, Web3 and all that is moving beyond just finance, right? So it was just finance. It was easy for the regulators to kind of figure out, okay, well, if they're making money off of this, IRS is like, okay, well, it's income, it has to be taxed. Or if the money's moving from here to here, then maybe some of the banking or money transmission laws are saying, okay, well, we have to know, we will have to close the loop. How did it get from this person to this person who's an intermediary, et cetera? But when you're including art and culture and, other aspects that, create value as well, I think it throws, the antiquated way of thinking of things or seeing of things, it just throws them off. And I mean, to be fair, if we think about like how the internet just plays now, it's very centralized, right? So that's something else that I think I guess regulators almost just kind of got used to, right? You're just now seeing that they're bringing, the giants to come to these different hearings and all that. And let's say the last 5 to 7 years. But the Telecommunications Act didn't come until the 90s. Was it mid 90s, 96, 97? Long after, AOL and all that was out. So I think, and I guess we say this a lot, regulators tend to be behind the curve, right? Behind innovation, always trying to find a way to catch up. But at the same time, I think it's important that regulators also be flexible about where they get their sources of information. I've been to different hearings, like, or just watched hearings nowadays because you can't go in person, but you can go to these different roundtables and all that and listen, and they tend to have the same people that go to these things and say the same things. And they're all, in an echo chamber in a sense. And so I think if if regulators could find a way to just be like, okay, well, we need to actually speak to people in the industry outside of these 3 people who look like us. And that might help them, have less confusion, and then maybe not pass on the confusion to the participants in the ecosystem. So I'll leave it at that.
Okay. Yes. Maureen, you just stated that the regulators are always like kind of right behind the innovation. Like innovation is always like far much ahead of the regulators. And when you look at Web 3.0, everything is decentralized. So it's challenging everything that is happening. It challenges what constitutes maybe a commercial transaction, what constitutes a firm, a security, etc., etc. So as an individual, maybe what kind of advice would you give to the regulators maybe who are listening to us today, to try and make them, understand where the whole internet or whatever is going, or the way things are going now? What kind of advice would you give to the regulator?
I would follow Maureen's point and say we really need to affirmatively go out and seek voices who don't sound like the same voices who sometimes are being heard by our legislators here in the United States, because the impacts for someone who is sending remittances back to their family overseas of Web3 and blockchain technology are going to be different from a multinational corporation CEO who is thinking about supply chain, and the blockchain tech implications are going to be different than the implications of a small business who's thinking, how do I build out customer loyalty, maybe through issuing utility-focused NFTs? But you need to talk to people across business and across life experiences to be able to do that. And the reality is, again, because this technology is global, if the United States doesn't have a pragmatic regulatory regime to allow this innovation to be able to evolve, then it's going to go overseas. And that's lost economic opportunity. So I would encourage regulators to listen to a more diverse slate of those who are going to be impacted by blockchain tech.
Thank you so much, Juan.
Yeah, I guess I would agree with that. My sort of general advice would be like, there are plenty of sort of folks out there with bad intentions, right? That are not, really, kind of there's no economic substance to their business. Like could you spend time going after those folks, right? And the people that, are kind of, Ripple and Library, and those are real businesses, right? Like there's economic substance to those businesses. Like I would make those, if you're going to prioritize who you're going to go after, right? Like I'd make those guys last, right? If you've got like some issue with them on the regulatory side, like, versus the vaporware people that, there's sort of nothing really to their business, like that's where I'd love to see, kind of the regulators point their various weapons.
Thank you, Troy. That was quite interesting. Yeah. All right.
From an IRS perspective, there's two things I wish the regulators would do. One, I wish they would really look at cash, because cash on the balance sheet is considered an asset, but due to inflation, it goes down in value over years. So cash is actually a liability. If I have any advice, I would just start denominating everything into Bitcoin, because there's only 21 million Bitcoins to ever be created. We know the inflation rate, and to me, that's the true asset. And then, if they're saying, oh, that's too much, then I think we should really look at international way of accounting. Michael Saylor with MicroStrategies, they try to use like the international method, where if the price of Bitcoin goes up, we take that as a gain. If it goes down, we take that loss. But currently in the US, we use GAAP. And so when it goes up, we don't take the gain. When it goes down, we have to take the loss. And so a lot of CEOs aren't purchasing Bitcoin and cryptocurrencies because there's no benefit to them, because if it goes up, they don't get an extra bonus because they can't take the gain. But if it goes down, they have to take the loss. And that's how they get fired. So it's just too much risk for them to invest in the Bitcoin and cryptocurrencies. And so I would say either change that rule or just change everything into a Bitcoin standard.
Bitcoin standard. Thank you so much, CJ, this smart guy. I like that. Yeah. Thank you so much. It has been like a great conversation, and I'm just hoping that people who are listening, both the people who are using our Web 3.0 and also the regulators, they will somehow come to an agreement of some sort. The regulator will regulate nicely in such a way that it doesn't suffocate innovation, and those who are using Web 3.0 will remember, like CJ said, to always write down and file their checks as well, so that they don't get into any trouble for fraud. Thank you so much. I think there's still so much to discuss, but because of time, we'll have to cut our discussion short. And thank you so much. And we're hoping to take these conversations further beyond, the virtual conference. Thank you so much, people.
All right, great job moderating the panel.
Thank you.